What's going on, guys? This is the trade breakdown for Monday, November 4th. Today I took NQ shorts for a scalp. This trade netted me a little over 20 points. And so let's get right into this trade. So right here at 9 a.m. or specifically 9:30, we had this turtle soup of this liquidity pool. This was our last area where previous SMT occurred. As you guys can see right here, ES took this low while NQ didn't, but now NQ took this previous or prior SMT low. But whenever you kind of see this sweep and then immediate displacement at a key time, that's how you know this low should now be protected until another key time is reached. So this is your classic turtle soup. You want to see breakaway gaps form, which is here. And this exact kind of setup formed last Tuesday, which I'll show you guys quickly just because it is pretty important to see. So let's go into the 1 minute chart. Same thing, same time. So as you guys can see, 9:30, we create our smart money reversal right here at 9:35, and then look at the exact kind of setup, right? And then since we had unfinished business above, we ended up having a very large move to the upside. And this was also on a Tuesday rather than a Monday, which also had high impact news. But you guys can see the exact kind of same setup with that 9:30 volatility injection and then the breakaway gap here, etc., right? So if we go into today's price action, you guys can see that on the 15-minute time frame, our first London high was taken. Our first London high, which was at 315 on the 15-minute chart, was taken at 5:30, right? So now this is our new London high, and it is below midnight, so that means it is in a discount of the relative dealing range. And after I saw this big displacement move higher, and then we started to look at the difference between this move here after we reach our buy side liquidity target, and then look at the candles and the displacement here, right? So what I wanted to see after taking an important pool of liquidity is to see if the initial first few fair value gaps and order blocks are going to hold price. And there's also SMT here with ES. ES had its, let's go to the hourly chart, it's just very easy to see. ES also had its London high up here, which was never taken. And so now we have SMT at an important timed key level, and we have price stalling above the buy side liquidity pool, and we're now failing to get above midnight. So that is showing that price is starting to get really weak. So once we have this consolidation, now we have some form of displacement on the 1 minute time frame, leaving two FVGs. Neither one of them get tapped into. Wicks are also gaps, so I had this marked out in real time. Price is failing to even get inside of this volume imbalance, let alone the 50% of this wick, which is very bearish. Once I saw that, I wanted to see these two up close candles act as resistance. As you can see, price comes up, rebalances into what this down close candle or up close candle. Price sells off, leaving what another up close candle and a fair value gap. So now this FVG in this up close candle should act as what? It should act as resistance until our pools of liquidity have been reached. So like I stated before, really wasn't expecting price, excuse me, to come a lot lower since our low was created at a key time. Wasn't really expecting this to get ran, but it is a no news Monday with elections, so it is a little wonkier than normal. But this, what I was targeting was the low of this or the high of this 30-minute fair value gap, and on the 1 minute time frame, it was just this first liquidity pool right here. We can make this a little bigger. So I literally entered shorts right off of this FVG, more specifically the low of this up close candle, and you guys can see here that not a single candle body closed above the opening price or the low of this wick, which is very bearish. Here you guys can see I got filled 20,183 and a quarter, and my stop loss was at the high of this up close candle. So I went short right here, 83.50 or 83 and a quarter. Stop loss up here. I had 9.5 points of risk for 22 points of a take profit. So over a 2-hour trade, pretty much as soon as I saw this 3 drives pattern into our up close candle, I knew that as soon as this high was formed, and we also had candle to candle SMT on ES, you can see ES failed to make a new high here at 1128, but NQ did. As soon as I saw that, I knew I was on sides. I wanted to see price to start flush, and once I saw this candle, of course, I knew I was on sides. But yes, I apparently paper handed this trade. I really wasn't expecting price to come back into the equilibrium of this range, right? All of this liquidity is in a premium up here, so this maybe should have been my take profit level, but I really wasn't expecting price to come much lower, so maybe that's something for me to study. But even this low, which I wasn't expecting to be broken today, since it was formed from that 930 Judas swing this morning, was never broken on NQ since we were trading the stronger asset. It was taken on ES, but I was in NQ shorts. But nonetheless, a very nice low risk setup on a day that normally isn't the highest probability, but you want to be trading around key times and just trusting your entry model. But as soon as these algorithmic signatures showed their hand to me, the CE of the wick being unable to be tapped, failing to get inside of that volume imbalance, leaving these breakaway gaps, consolidating above a buy side liquidity pool. I'm not sure if there was SMT up here. Yes, there was also SMT up here as well with the London SMT. So we have double SMT, higher time frame, lower time frame SMT, and then now we have PD arrays, bullish PD arrays starting to be disrespected, and then now we have bearish signatures showing its hand. So this is how I was able to frame that trade and why I was able to net a quick 22 points in this trade. But I hope you guys enjoyed. If you have any questions, leave them down below, and I'll see you guys in the next one.